Houston's office reset is fueling a demolition boom. And for years, Houston's commercial real estate market has been defined by rising office vacancies. And today, however, the market has entered an entirely new phase. And the challenge is no longer simply filling empty office buildings. Instead, owners are asking a much bigger question. And is the building worth saving at all? Is the question they're asking. And across Houston, many older Class B and Class C office properties have become economically obsolete. And in many cases, the underlying land is now worth more than the structure that's sitting on it. So that's leading some owners to consider demolition as the most financially responsible strategy. And for commercial property owners, investors, developers, and business owners, this shift is creating both challenges and opportunities. Houston's office vacancy remains among the highest in America. And Houston's office market recorded an estimated 26.8% vacancy rate, call it 27%, during the first quarter of 26, placing it among the highest vacancy markets in the United States. So while premium Class A buildings continue attracting tenants through modern amenities, energy efficiency, and collaborative workspaces in prime locations, older office inventory continues struggling to compete. And today's tenants expect modern HVAC systems and flexible floor plans and high-speed technology infrastructure, but also walkable amenities and attractive common areas and energy-efficient buildings. And unfortunately, many office buildings that were constructed during the 1970s through the 1990s just simply cannot compete without massive capital investment. So when land becomes more valuable than the building, and one of the clearest examples of this is the Hal Moody Center at 5100 Westheimer. And the approximately 109,000 square foot office building was built in 1973 and carries an assessed value of near $9.3 million. However, approximately $7 million of that $9.3 million in value comes from the land itself. So only a small portion represents the actual building and the structure that's already been depreciated. And that changes the investment equation entirely. So rather than spending millions retrofitting and renovating an aging office property with uncertain leasing prospects, many owners are concluding that demolition is going to preserve more value long term. So why demolition would make financial sense? And really, it would have to be for a debt-free owner for a demolition to immediately improve their financial performance. And how so? It's going to eliminate carrying costs. And vacant buildings still require security and insurance and utilities and maintenance and property management and repairs. So removing the building is going to eliminate many ongoing expenses for the owner, but also reducing their liability. And empty buildings become liabilities. And owners can face vandalism and water damage, code violations, safety concerns, and higher insurance exposure on an older building. And vacant land will dramatically reduce all of those risks while preserving redevelopment flexibility. And a cleared site offers flexibility to go vertical for, say, medical offices or a mixed-use development or retail centers or multifamily housing project or industrial flex, or simply build-to-suit projects. So rather than being tied to an obsolete office design, owners can regain and recapture control of the future possibilities. Now, debt is keeping many buildings standing. And ironically, many buildings that should be demolished cannot be. And the reason why? There's debt on it. There's still a mortgage. And many Houston office properties still carry loans that far exceed the current economic value of the improvements themselves. So lenders are often hesitating to finance demolition of those buildings or to foreclose or to invest additional capital or to approve a redevelopment. And as a result, obsolete office buildings remain frozen in place while waiting for loan restructurings or ownership transfers or market improvements. Demolition companies are seeing more work, and the office reset has also created significant opportunities for demolition contractors. And some recent Houston area projects include the former Flora campus in Sugar Land, the George R. Brown Convention Center renovation, numerous obsolete office buildings throughout Houston. However, higher interest rates continue slowing private redevelopment, meaning that many demolition firms are supplementing work through public infrastructure projects. So the office market is becoming a land market. And perhaps the biggest takeaway is this: that Houston office values are increasingly being driven by land economics rather than the rental income. And that represents a major structural shift. And investors are now evaluating redevelopment potential, zoning, the traffic counts and population growth, and really diving deep on the future highest and best use for that property, as opposed to rather than simply looking at occupancy percentage. So the opportunity for owner occupiers, and not every office building is destined for demolition. And many owner users are taking advantage of historically discounted pricing right now. And businesses that can afford to purchase their own office space for their own operations can often acquire properties at prices well below their replacement cost, while also eliminating future rent increases for themselves. And this trend continues to help remove older office inventory from the leasing market. So what this means for investors and commercial real estate investors should pay close attention to several emerging trends. The first is that land is becoming the primary asset. And future appreciation may come from redevelopment rather than the office cash flow. And debt matters more than ever. So owners without debt possess significantly greater flexibility in a redevelopment project. And three is that adaptive reuse will continue. And many buildings become medical offices or multifamily housing or educational facilities or a mixed-use development or self-storage or an industrial conversion. And four is that capital markets will drive recovery, and lower interest rates and improved lending conditions will likely accelerate redevelopment activity. So here's some key takeaways on Houston's office market. And it's evolved from an occupancy problem into an asset repositioning challenge. And many Class B and Class C office buildings are now worth less than the land beneath them is. And demolition is becoming an increasingly attractive strategy for debt-free property owners. And distressed loans remain the biggest obstacle preventing redevelopment in some cases. And adaptive reuse redevelopment and owner-occupier acquisitions will likely shape Houston's next commercial real estate cycle. So, final thoughts for the day. Houston's commercial real estate market is undergoing one of the most significant transformations in decades. And for many aging office properties, the future is no longer found in attracting another office tenant. It lies in unlocking the value of the land itself. And as financing conditions improved and distressed assets change hands, I expect to see more demolitions and adaptive reuse projects and redevelopment opportunities reshape Houston's office market over the next coming years. So whether you're an investor, a developer, a business owner, or a commercial property owner, understanding this market shift will be essential for identifying new opportunities before the next phase of Houston's commercial real estate cycle begins. A little bit about me. My name is Bill Rapp. I'm a commercial real estate advisor with eXp Commercial, the Viking Enterprise Team. And we serve Houston and Katy and Fulshire and surrounding Texas markets. And I help investors and business owners and developers buy, sell, lease, and finance commercial real estate while providing strategic guidance on redevelopment opportunities but also commercial lending solutions. That, my friends, is it for the day. Thank you for taking the time to watch. Please visit my website, houstonrealestatebrokerage.com. You can schedule a consultation so that way we can have a conversation, and hope you have a good day.